larger principle which is going to govern us in the long term is structural, systematic and systemic reforms.
With an eye on the Make in India campaign, the Modi government unveils its maiden trade policy, sets an ambitious target of exports worth $900 billion by 2020, says tariffs must be rationalized to make India more competitive. SEZs will also enjoy all the benefits of the new trade policy.
The second lead tonight, breather for former Prime Minister Manmohan Singh and industrialist Kumar Mangalam Birla over the coal scam case. The Supreme Court stays all proceedings against them and 3 others, also issues notices to the CBI.
Trouble for Marins over the Aircel-Maxis case. The Enforcement Directorate cracks the whip. Attaches properties worth over 740 crore rupees.
The bulls begin the new fiscal with a bang on the Lal Street. The Sensex rallies over 300 points. The Nifty reconquers 8,500 thanks to a late rally.
Motown is still not out of the woods as demand for cars remains sluggish. Maruti sales dropped 1.6% in March. M&M skids. Commercial vehicle sales provide some solace.
Fuel gets cheaper for the first time in 2 months. Petrol prices cut by 49 paise per litre. Diesel prices slashed by over 1 rupee a litre. Aviation fuel also gets cheaper.
After Max Bupa, MetLife looks to hike stake in the insurance business, plans to increase its shareholding to 49% in PNB MetLife by buying out J&K Bank and Shapunji Palanji's stake. That's the big CNBC TV 18 exclusive.
Nuclear talks between Iran and the West hit a deadlock over the details. Crude prices recover despite U.S. inventories rising for the 12th straight week. Stocks on Wall Street bear losses. European markets perk up.
Market fell so much yesterday from the high point. The Nifty lost 60 points and more importantly the Bank Nifty lost 300 points.
I would not be pessimistic, but having seen 35-40% growth in the last 12 months, as an investor, we should have some patience.
It's a mild negative start. You would have wanted the financial sector perhaps for good luck reasons to start with one green tick, and that's what the Sensex is giving you. The Grand Old Index starts with about 0.1% in the green.
Much below what the street was estimating, and the big disappointment has actually come in the exports sales. So overall, the sales are down by about 1.6% year on year.
After a very sedate start, things are picking up for the markets. So we're at the high point of the day. The Nifty and the Sensex are higher by close to about 0.5%.
On the losing side, as I said, Suzlon really stood out. And TVS Motor as well. That's in a bit of a problem zone now. That was down 3% in a strong market and is now down about 21%.
The new financial year has begun with a big bang on the Lal Street. Good evening and thanks for joining us here on India Business Hour. I'm Nayantara Ryan Silvi. I'm wearing the flavor of the evening, green.
Absolutely, you're in the right color, Nayantara. In fact, let's start things off with the day's trading highlights. The bulls staged a terrific rally in late trade as traders went into the long weekend with some strong positions. The Sensex reclaimed the 28,000 mark after surging over 300 points. The Nifty almost cracked a century as it scaled 8,500 once again. The mid-caps were not far behind either. That index closed over 150 points higher. Now, this strong start to FY16 has markets experts smiling again, but there is also a hint of caution in the air. Adrian Moat of JP Morgan remains overweight in Indian markets, but he does not see appreciation in growth in the short term, while Deepan Sheth of HDFC Securities sees policy stumbles clearing.
We maintain an overweight view on India with the expectation that you'll get two key drivers. One is an improvement in the growth numbers, so both the economic growth numbers and then eventually the earnings numbers coming through, and also an expectation that interest rates will be cut. So I think there's a lot to look forward to in India, and it's really going to be an issue of how patient investors want to be when investing in the Indian economy, which is not likely to generate very, very rapid appreciation in growth rates, perhaps even in the second quarter of this year. It's probably going to be more back-ended.
If you zoom out a little more, then you see that in 5 years we've gained about 60% on the Nifty, which is actually less than a 10% CAGR, a shade under 10%. Zoom out 10 years. And you see that you've delivered about 300-odd%. We've always had governments which delivered stumbles on policy and governance. Now, both these large, humongous, monstrous factors have kind of taken care of themselves over the last 1 year. So now if you tell me, Dipin, how do you feel about the next few months or years? So I will say, I don't know about months, but over the next 5 or 10 years, I think this is a super period to be in equities.
Some market experts' views on where the Lal Street is headed. The much-awaited new foreign trade policy is finally here. With an eye on the ambitious Make in India campaign, the Modi government today unveiled its first foreign trade policy. Presenting that policy, Commerce Minister Nirmala Sitharaman said it would focus breathing new life into exports that has hit a rough patch over the last few months. The government has set itself an ambitious target of exports worth $900 billion by 2020. 2 new schemes have been announced to help rejuvenate exports of merchandise and services. E-commerce exports will now be eligible under the new Services Export Scheme. The government has made it clear India must rationalize its tariff structures to become more competitive globally, which is not good news for intermediaries. CNBC TV 18 Rituparna Bhuyan caught up with the Commerce Minister Nirmala Sitharaman a short while back. Here are the slides of that exclusive conversation.
Thank you for joining us, ma'am. In several areas in this foreign trade policy, we actually saw a strong imprint of what Prime Minister Modi had said in his 15th August speech. So a lot of inspiration from his speech, ma'am, as far as this foreign trade policy is concerned?
Yes, absolutely. You're right. The essential spirit behind this foreign trade policy has been the vision which the Prime Minister spoke about during his Red Fort address. We are looking at labor-intensive sectors, sectors which generate more jobs, sectors which are environment friendly, sectors which are going to raise the standard of Indian production, quality of Indian products, sectors which give us a great value addition to be a part of the global value chain. These are the ways in which we have reformatted ourselves, but the driving force behind it is ultimately the larger principle which is going to govern us in the long term is structural, systematic and systemic reforms are required. You can carry on with interest subvention, you can carry on with incentives, you can carry on with promotions, but ultimately global competitiveness is sustained or is obtained on a sustainable way only when competitiveness is derived on strengths. So we would keep that larger principle in mind and therefore focus on agriculture, they could therefore focus on labor-intensive areas, focus on environment-friendly conversion of waste to wealth, and also make sure that high-tech products which bring in value addition will be priority.
Ma'am, I'll take the independence of asking one specific question. It was interesting to know that you talked about defense products. There you have identified specific defense products. So clearly we are looking at a strategy of promoting defense exports from India. Is that the right sense, ma'am?
Absolutely, and that is consistent with the kind of decisions steadily the department has been making. You remember a couple of months ago, even as we were talking about delisting of many of the industries, many being put onto the negative list. In defense, we came up with about 60 odd items which can be produced through joint ventures without having to go through the licensing procedure. So that was indicative of the kind of things that we were working on. And today the policy, if it is speaking about defense, it is speaking because we consistently maintaining that we are opening up under the Make in India a lot of newer sectors. What was Make in India all about? Or what is it about? It is about new processes, new mindsets, new areas of activity, and new production areas which till now have been restricted or closed to investments from abroad, areas which have never been given joint venture opportunities of money from abroad, or areas where we had strength they could not even export. So we've opened up all of them, whether it is the railways or defense. We very clearly went ahead at doing it, and we are now consistent in including them in the foreign trade.
And even in the services sector, ma'am. I mean, there was a scheme in the previous foreign trade policy, but here you have gone ahead and included a whole lot of services exports.
The gamut of services, even though definitionally many of us would have understood it, in India, services, because of the contribution, which is very good contribution, made by IT and IT-enabled sector, all of us thought it was only IT-enabled sector, but hospitality, wellness, medical tourism, many such R&D, research These are all sectors in which we have inherent strength as services. So if service sector has to be promoted, all these sectors should also get the benefit of. And that is why the foreign trade policy has included all these sectors.
Ma'am, let me invoke the BJP spokesperson on you now, and this topic is related to Make in India. If manufacturing is to succeed, if exports are to succeed in the goods sector, then you will need land. Going forward, do you see the land-related law finally coming into place, and if not, what are the options with the government?
See, let's start with one thing. Land, every state has acquired. The industrial infrastructure corporations exist in every state. Many states have already acquired a lot of land, which are wasteland, barren land, less productive land, and kept it for industrial purpose. Now, over and above this, if there is a need for land for public costs, whether you're having irrigation, whether you have a thermal unit, whether you have a nuclear plant, or you're building roads to connect the villages, these are absolutely publicly required. Now, if after the Industrial Infrastructure Corporation of every state, having used the land banks that they've created over the decades, and if there is a need for something which has to be obtained for these public costs, it is necessary for us to obtain. And there, in fact, one of my parliament answers also I have given very clearly, even till today, the quantum of land, if you look at it as a percentage, of fertile land being used is absolutely minimum. So if you're talking about land, we are certainly not talking about agriculturally fertile 3-crop, 2-crop lands. We are talking about, first of all, those lands which are not agriculturally really all that rich. Second, even if for the contiguity kind of an issue, you have to pick up on land which has got to be 1-crop land. Adequate compensation is going to be given. 4 times market prices being talked about. We are also making all kinds of amendments. 9 amendments have already been agreed to. If after this we are going to contain ourselves saying no, the farmer, it has inherent fallacy. A farmer also requires development. He needs his land better served by better roads, better electricity, better water, and so on. So let us in this debate not get tempted to leave the farmer in one side and talk about others on the other side. Farmer is also part of this. The rest of them are also responsible for the farmer's welfare. So I think this debate is getting skewed too much, skewed unfairly. Unfair to the farmer and unfair to the rest of the development needs. I think we have to balance them both and not get too much of an extreme.
Quick last question, ma'am. If worse comes to worse, is the option of a joint session open in the parliament?
See, as it is, after the amendments, we are talking with all the parties. You know, Mr. Gadkari has also replied all the concerns which were raised by Mrs. Sonia Gandhi. So I think reason should prevail rather than, political grandstanding.
That's the Commerce Minister speaking both on the new foreign trade policy as well as the land bill. Well, Ritu's had a pretty long day. He also caught up with Commerce Secretary Rajiv Kher, and he began by asking him why there was no mention of the interest subvention schemes that various labour-intensive sectors were hoping for. Meanwhile, Revenue Secretary Shakti Kant Das told CNBC TV 18 Sapna Das that every special economic zone would be eligible for several awards.
Interest subvention is something which we had proposed to the Ministry of Finance. And we had proposed a 3-year program for interest subvention for a few sectors where labor intensity is high. And in the year 15-16, the budget contains a provision for that.
Absolutely.
So clearly interest subvention is something which is on board, which has been approved. Now we have to go through the decision-making process, which means you have to get the sectors approved through a cabinet decision-making process.
And that cabinet decision will happen within this month?
That would have to happen as early as we can. We are hoping that in the next few days, maybe a month or maybe 2 months, we would be in a position to get that approval.
Let me now get you on these 2 very interesting schemes that you have announced. Let me me start with the manufacturing, the scheme that you have announced for the manufacturing.
Merchandise exports
from India scheme. Now, one way of looking at it is that all you have done is amalgamated those 5 previous schemes and given away the same scheme in a different format. How would you react to that?
No, not really. That's not the way it is. It might appear as if 5 schemes have been collapsed into one scheme, but once you go into the print line, the fine print of it, you will realize that there is a significant amount of work which has gone into it. First of all, while identifying those products, as I mentioned earlier in the day, we have very clearly gone into identifying the revealed comparative advantage. We have looked into unit value of products from India vis-a-vis the rest of the products. And we have gone into complementarities. So we have done a very significant trade analysis and scientific analysis to identify the products. So it might appear as if we are collapsing all the schemes, but actually when you go into it, you will find that some products don't find mention there, or some new products find mention there. So it is a completely new exercise.
So far as SEZs are concerned, we need to look at what has been done rather than what has not been done. What has been done is very significant. Number one, the dual use of infrastructure has been permitted already, and it has already been notified even before this foreign trade policy. Number two, what has been announced today, that under the reward scheme, SEZ exports, that is exports from SEZ units, will also get incentives. So that is a major thing which is currently not available to SEZ exports. So I think these two things put together should be good enough to make our SEZ units competitive to boost their exports.
So that's the government's point of view as far as the foreign trade policy goes. But the policy itself has received mixed reviews from experts in industry. While a few say there's nothing new in the new trade policy, others believe it will do wonders for improving the ease of doing business. Here are all of those reactions.
And normally what they say that this is new wine in old bottles. So what I would like to say is that this is not really a new policy, but it is really a major scaling down of the facilities that were being given to the exporters under the old policy, because there are many things that are hidden, in this. And I would say that this is less wine in new bottles.
Inclusive, they have looked at the issue of labor-intensive manufacturing scope, export scope. They looked at agriculture in a big way. They looked at SEZs in a big way. And I think what is good again is the theme of the government in totality of simplifying transactions and ease of doing business.
This new regime which has been put forth as far as exports are concerned, because several schemes have now been amalgamated into one particular scheme. So does it lead to more competitiveness as far as Indian exporters are concerned?
Absolutely. See, for exporters, time is money, and by elimination of multiplicity, it is rationalization, simplification, and ultimately to give time to exporters, which is really precious. And here we have seen, multiplicity of the schemes have been removed. Now only 2 schemes are left. Also, a very big thing which has been done is transferability of the scripts, and that is a step in the right direction, which I have been, and we have been all requesting and pursuing, and that is a very, very good step.
All right, now moving away from the hits and misses of the new trade policy to the other big stories of the day. Some relief for former Prime Minister Manmohan Singh and industrialist Kumar Mangalam Birla in the coal scam case. The Supreme Court today stayed the order issued by the CBI Special Court, which had summoned them and 3 others as accused in the case. Ashmit Kumar, who has been tracking that story, joins in with more details. Ashmit, what did the court say today?
Well, it was more of the council that were doing the talking. The parties concerned here, the former Prime Minister Kumar Mangalam Birla as well as PC Parak were out with their entire legal battery of legal eagles, and the argument that they were essentially making was that the CBI itself had sought to close the investigations on a couple of occasions, that the number of reports that had been submitted by CBI at no point did it allege malified intent on part of the former Prime Minister. In fact, Kapil Sibal, representing Manmohan Singh, also went on to argue that the decision to allot scarce national resources to a private enterprise vis-a-vis public sector enterprise cannot be deemed illegal, that this was an administrative decision, and that difference of opinion at that stage again cannot be held as illegal. Now, in response to all of this, the Supreme Court, we understand, has once stayed the summons order that was issued against Kumar Mangalam Birla as well as former Prime Minister. What the Supreme Court has also done is that it has stayed the proceedings that the parties concerned were facing before the special court in the Hindalco case. So towards that end, those proceedings have been stayed, and moreover, CBI has been directed to explain its position with respect to the charges that have been leveled against these parties. So as of now, interim relief coming in. The hearing, we understand, will continue in 3 weeks' time. But essentially, the parties concerned are currently off the hook. On that note, let's listen into what KTS Tulsi, the counsel for Manmohan Singh, and what Ashwin Parekh had to say.
Till the Honorable Supreme Court decides for itself the substantial issues of law, the proceedings before the special court against the former Prime Minister and others stand stayed. That is the purpose. This is a stay pending the decision of the issues by the Honorable Supreme Court, because the rule is always issued when the court finds a strong prima facie case.
The court doesn't say that examine so-and-so, arrest so-and-so, seize so-and-so document, etc. That's the discretion of the investigating agency. But this case is going to be a milestone, because each of these fundamental principles of criminal law will have to be restated authoritatively so that there is clarity on these matters and there is unanimity and there is no confusion.
That's KTS Tulsi as well as the former Law Minister Ashwini Kumar reacting to what unfolded in the Supreme Court. Do remember, Ashwini Kumar had to step down as the Law Minister on the back of the cold gate. While there may be relief for Manmohan Singh, there's trouble for one of his former cabinet colleagues. Trouble for the Maran brothers over the Aircel-Maxis case. The Enforcement Directorate has gone ahead and attached their properties under the Prevention of Money Laundering Act. We're talking about attaching of properties over 740 crore rupees. The Enforcement Directorate says companies run by Dayanidhi Maran and Kalanidhi Maran received illegal gratification worth over 742 crores. The amount was paid by companies based in Mauritius to Sun Direct TV and South Asia FM Limited. The ED has also attached properties of Kalanidhi Maran's wife, Kaveri, as she is one of the promoters of Sun Direct. Okay, on that note, let's get back to the markets. Ramdev Agarwal of Motilal Oswal Financial Services says he remains hopeful about the fresh highs that are being scaled over the next 12 months, and as he would remain fully invested in the Lal Street. However, he also told CNBC TV8's Lata Venkatesh that corporate earnings look like they're in a slow growth phase, meaning a sharp rally is unlikely. Here's an excerpt of that conversation.
Every year is unpredictable, I can tell you. I mean, one tries very hard to see very clearly next 12 months, so let me have my strategy right. So, but of course, that goes on. But my sense is that it's going to be very exciting. I mean, there's a lot of complaint that there is nothing visible on the ground and those kind of things. And clearly, even thanks to oil price and other things, the corporate earnings have also slumped.
Yes.
So corporate earnings growth has not come as per what it was thought 3 or 4 quarters back. So I think still we are into the low, slow growth in the corporate earnings. A lot of action should be happening in next 12 months on the interest rate front. Lot of action is also happening in the world economy.
Yes.
Finally, Europe is probably showing some revival. So I hope second half is much better for the world economy, and hence my external segment, which was also a big concern, also start doing well. Consumer is on the top of the world. Government spending will start from 1st April, and investment cycle should also eventually pick up. So all the 4 cylinders, by the time it is 4th quarter or something, should be firing. Okay. So I would remain hopeful, I would remain fully invested, because Modi's story, India's story is still the best story right now anywhere in the world. Okay. So I would not be pessimistic, but having seen 35-40% growth in last 12 months, as an investor, we should have some patience, some halting that, I would calibrate my expectation. Not a decline, but if it is no return or 5-10% return, I would be fine.
Okay.
But nobody can calibrate what exactly will happen in the market.
Fair enough. But, you know, after that inflection point of the fourth quarter, if you have to look at a 3-year, that's a more comfortable horizon for you. You think there is still, whatever, 20% CAGR left to be made?
See, I always go with a 15% CAGR. Can we double our money in 5 years safely with a very limited downside? What is more important in investing is how much downside protection you have. On a 5-year basis, my sense is maximum downside is 10% or 15% and upside is 100% in 5-year basis. That's my honest belief.
Well, we're totally out of time, so we have to wrap up this edition of India Business Hour. Trading will resume on Monday, so enjoy your long weekend.
Thank you so much for watching. Good night.